I want to ask you guys, I'm curious, how many, give me a number. How many charts do you trade?
Do you find that the US dollar pairs are easier to kind of, I don't want to say predict, because that's maybe not quite the right word, but they're less volatile? Being a US resident, you find it easier to kind of navigate those markets? Or is it more so because those certain pairs, that if they dip too low, they're eventually going to come back to familiar levels? So once you trade them long enough, what the key levels and important levels are.
So James, that's a phenomenal question. And institutional money went long gold last week. They sold the dollar, and the dollar is up today. So what do you think? Do you think it's an opportunity to kind of get short USD? What do you think?
This is kind of a tricky thing to look at because even on your chart where gold is doing a head and shoulders sort of pattern here, um,
Hmm.
on something I drew was a wedge pattern that gold broke underneath. So it could be, that price may be trying to come down further and hopefully I hope it makes this decision soon,
Hmm.
because what it looks like is it could complete this move down to the 1950s, 1954, 55 range. Or, we see this good 4 hour close right there showing, like, suggesting maybe it's a turn back to the upside. But right now it looks kind of mixed. The break under the wedge was tough.
Hmm.
Yields are still trying to push higher. And why I'm confused, I guess, is because of last week's Fed statement was like pretty dovish sounding, and as a result, we're looking at falling gold, and the indices have been mixed for the past 2 days. So what is happening now, I think, for gold's case, is that it got way too overextended in the initial run to the upside. We saw like an incredible percent gain for the amount of time it took. And maybe, traders are letting off the gas a little bit and just taking profits and letting things play out. So gold, I would say, if it can stay either above these lows from the 4 hour of our last 4 hour candle, or if it can complete the move down to 1954 and stay there and show rejection as well, then I think it would be worth looking at longs, because you can set your stops pretty low beneath that. But if not, and it breaks further down, I feel like we have quite a ways to go before we see any significant support, which I was looking at, like the 1930s range would be the next. So just kind of watching that and seeing where things go. And it's also the same case for, been watching Aussie dollar as well.
Hmm. I was
I
going to
have
ask you
this,
about those
yeah, I have this
USD pairs.
bearish bias towards the dollar now, but the dollar and yields are still fighting for more gains to the upside. Whereas we see the RBA released their bank statement last night, and the hike was expected. They went up another 25 basis points, but um, price fell significantly. We just see it like a series of just red candles on the 4 hour
Hmm.
time frame, and it touched these highs around 65 1, and I guess maybe what this looks like is it could be a potential just pullback for another test to the upside. But here I got this support level. If it hits this and bounces up, I'm going to be considering looking to go long here. And if it breaks lower, I'll be looking at the trend line for longs. But I think the plays here for gold and for risk on pairs such as Aussie dollar is to make sure moves get completed. And when you enter a trade, or when I'm entering trades, if I do, I'm going to keep my stop losses tight. So if things really just aren't going the way I think they're going, then I'll take a small loss.
Fair. I think that's well put, Frank. And again, with the dollar index back on the rise here today, there is there's a lot of strength to these green candles that we're seeing on the dollar index. However, I think it's fair to say we still had a pretty solid news week last week. But I think maybe what markets are looking at is, well, you've got CPI next week, and before we can really get too optimistic, we got to see that inflation number is moving in the right way.
Did you know our market scanning software, the Edge Finder, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The Edge Finder not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the Edge Finder at a discounted price when they use promo code A1YT. You can check out the Edge Finder with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Big break to the downside last week following an FP where we saw jobs numbers come out cooler than expected, which in some ways was what the market needed to see in terms of risk appetite. But now we're seeing the dollar kind of creep back up to these levels. And I pointed this out last week. I said, if you're a dollar bear, even if you're a dollar bear, whether you're bullish or bearish, if you are a dollar bear, it's probably not the best call to get short after, a big move like this. At least that's how I would approach this. Now that we're seeing the pullback, do you think this is an opportunity for the bears who wanted to get involved, or do you think this is a trap and that the dollar index is going back up? I'd love to get your thoughts on any pairs that you're looking at. Probably best to look at things like euro or pound dollar, as I'm sure that's what the audience is looking for. But we'll let you take over for a second here.
Okay, all right. So yeah, just to firstly look at that dollar index, and the market needed something to get it moving, and it was the big news week last week, and as you said, Nick, it broke this range that it found itself in. So and for me, this is retracing to a good area for shorts, is how I'm reading this chart. And where could we take it to? I mean, we could potentially take it down to this grey zone here. If I pull this across slightly, this could potentially be our first target for the dollar index. So, I think that's a break, retest, come lower. How far it will come up here, maybe test the moving average 20, but I'm seeing, dollar weakness. And if we, see this on a few other charts, so euro US dollar is a perfect example. It's clearly broken structure, and it's been trying to do this for a while. Ever since it came down here, structurally, we had it was just trying to break higher, and the dollar, all the dollar majors were just in this ranging, funky price action, wasn't going anywhere. And again, we finally got this bullish daily candle on Friday. It is, it's hit into a piece of resistance. Okay. So it's worth pointing that out. But I like buys in here as well. Just from a technical analyst point of view, it's retraced enough. It's finding, potentially it will find some support here. If we drop down to the H4 chart now as well, we can see this is a nice level. This is where price was once resistance, and how many times do we see this pattern? What was once resistance becomes good support. So if we get the right reaction in here, then I think we can potentially take price back up to these highs. This would be my first target. I wouldn't, unless it starts breaking these highs, I would only take it back to this area, of resistance.
Sure.
You
Well,
know,
Tom, I want to jump in there too with you on the euro dollar. I made the point just before you mentioned or you came on, you know, the dollar index. If you're a bear on the dollar, then yesterday, you know, we talked about this on stream yesterday and the day before. You know, you can't buy it after the big run up, right? So if you're somebody who wants to be a euro bull, I think it's reasonable, even if you're a dollar bear or dollar bull, doesn't matter. You know, it's probably always best to wait for a retracement, to wait for a place where you get that better risk to reward. Someone in the audience here has pointed out that I said that gold will break 2000, which to clarify, first of all, you know, Tom and I, we've been doing this for a long time. Sometimes we're right, sometimes when we're wrong. When I am wrong, I will always let you guys know. I don't hide or shy away from the times that I'm wrong, but I did not say gold would go into the 2000s. What I pointed out, and please go back and watch my video if you'd like to confirm this, I pointed out that if gold broke into the 2000s, I would take that as a potential pullback signal. So, you know, when it comes to setups and when we're talking game plan here, Tom and I are pointing out ideas. This is not saying, you know, if you think that there could be a breakout, that's not a call out that, oh, gold is going to break out. For me, what it was is conditional. If we get the breakout on gold and we see a pullback, that could be a momentum entry for me. But we didn't get that, and we never really made any sort of significant move back into the 2000s. I was actually looking at this, Tom, in terms of like this 1960 area. Are we going to get support to hold? I would love, and I'm sure a lot of our audience who does trade gold, I'd love to get your thoughts on gold. Is this a support area? I mean, I was really playing around with it for a little bit, but I don't love the way this latest candle is trading. This is a 4-hour candle. We wicked off the lows, but we're kind of staying steady, and I'd love to see how this candle closes. But I'd love to get your thoughts. What do you think about gold right now?
Yeah, so we've been discussing this today, funnily enough, gold. So I would like, you know, if we take a bigger picture view, first of all, so if we go to the weekly chart, all right, you know, it's still a buy. Everything is to buy gold, you know, and on the weekly chart, you know, will it retrace down to here? Maybe the moving average 20, maybe it wants to come back and test this channel. You know, that's the $1 million question. And as you mentioned, Nick, you know, we'll give levels, but I need things to happen at these levels.
Sure.
You know, for me to have a setup. I just won't trade these levels blindly. So, you know, this is the $1 million question. Where will it retrace to before we get another move up? So that's the view on the weekly. But the daily for me has changed a little bit because, you know, I pointed out this level, I think on last week's show, mate, or on, you know, before, and I really like this level here, okay, because you can see price has reacted historically at this level, okay, we've got, you know, we've got the moving average 20 catching up, yeah, so, you know, potentially this could be a really nice level, but what I don't like is the fact that this could potentially be a structure break for me. You know, we're not getting higher highs. That's a bit of a red flag.
Right.
Yeah. And price, if the candle stays like this, breaking this low, that is a bit of a daily break for me. So that would suggest we might come lower. Okay. But, you know, a big but, you know, if the candle today, we saw a huge wick on this candle and it closed back into this low, something like this, even if it was a red candle, but we had a big wick, I would be interested in buying gold. But if it breaks this level and the candle stays as it is now, then I'm not interested. I'll have to wait, you know, maybe a day or two and see what, you know, kind of price action happens in this zone. But you cannot get away for the fact that for me, that would be a daily structure break, lower lows.
Yeah,
So
no,
it's
that's fair, Tom. And that's where I bounced back and forth on the gold idea that I was having was, you know, I'm not decisive enough here at this level. And I was debating earlier in the stream, like, do I want to get long after this wick? But again, I do pay attention to the daily. And I think everybody in this audience, you guys should consider the daily in your analysis. This level, sure, it's it's a markable zone of potential support. We did have this area hold really nicely, but as you mentioned, a more key, pivotal, and recent area in the market is this 1940 level, right? You've got a huge rejection off this, huge rejection off this. And then when we broke out, that was like the clean sweep for the bulls. As soon as we took over that 1940 level, boom, it went right on up to 2000. So for me, if you're a day trader or you're a short-term swing trader like myself, this is possibly, as Frank pointed out when he came on, I mean, I liked Frank's clarity on this, pointed out that we may be kind of getting a little bit of a head and shoulders pattern. And you've confirmed that idea, Tom, as well, with this lower high. You can't, as you mentioned, you can't really deny that we did kind of get that. And especially on the daily chart, which is that really important chart, we're not quite getting the signals. Now, I would agree. So when we talk, and again, people in the audience, you have to understand, when Tom and I are in here and we're sharing our ideas, these are game plans. These are not entries and exits, right? So just because Tom mentioned, like, for example, that if this thing were to wick off of this level, that's a different story. In that case, that's not a call out to say, oh, I think it's going to wick today. It's, if it does happen, then there might be a bullish entry there, because that's a difference in, closing lower than this previous low. Because sometimes you get intraday wicks that kind of close back and you give a nice, actually bullish candle, depending on how that forms. So I think that's really worth mentioning. I want to ask you guys, I'm curious, give me a number. How many charts do you trade? I'm very curious to see what you guys say. So we got 3 to 5, 3 charts, 1. Okay, says all charts, 9 to 10, 4, 3 to 4. So if I had to give it a number, I think I'm going to say probably like 10 to 12 is probably what I actively kind of rotate in and out of.
I'm curious because I know that you don't trade like every single chart on the market. I mean, that's a lot to keep up with. So I see a lot of US dollar pairs. It's basically Euro USD, Pound USD, USD CAD, USD JPY.
Yeah.
Euro JPY. Do you find that the US dollar pairs are easier to kind of, I don't want to say predict, because that's maybe not quite the right word, but they're less volatile in that, with news coming out and being a US resident, you find it easier to kind of navigate those markets? Or is it more so because those certain pairs, that if they dip too low, they're eventually going to come back to familiar levels? So once you trade them long enough, what the key levels and important levels are, and that something like the US dollar is going to eventually come back to key levels, so you can find easier entries that way.
So James, that's a phenomenal question. And to answer your question, if I had to pick one chart of everything that I trade, it's the dollar index itself. Now, of course, I'm not placing trades on the dollar index. I'm picking a currency pair. I might be trading gold. I might be trading the S&P 500. But for me, almost everything stems from the US dollar, because I'm a fundamentalist in the form of, I pay very close attention to macroeconomics to the best of my ability. That's like opening a can of worms. That's like saying you understand space if you're an astronomer. Like there's so much to being a fundamentalist, but I find that there's so much stuff out there to possibly take into account and to watch constantly, that you do in some ways have to specialize. You have to find your niche. And for me, my niche is the dollar. So I don't trade things. Not that I'll never trade them, but I'll rarely, even if I see a setup, like for example, Pound Aussie or Euro Aussie, it's not that I hate these things and I don't think they possibly could be traded. It's just that anything with a USD in it, I feel like I have a little bit more. Well, I definitely have a lot more understanding fundamentally on what's going to drive that dollar. And especially, the US dollar is like it's the global reserve. So if I'm looking at, the pound against it, the euro against it, I know that the dollar component to that trade is going to be really dominant. It's really important what the Fed has to say. So I feel like by really fixating on the dollar, I can get kind of an understanding of where I want to be like broadly speaking, and that even extends to like S&P 500, NASDAQ. Those things have a relationship to the dollar, because when you talk about the US dollar, in some ways you're also talking about risk appetite in the world. So like, James, if we're looking at an environment where the global economy is expected to slow down, likely that dollar is going to be running hot. It's going to be going up because all the other currencies, the emerging markets of the world, the higher risk stuff is going to be struggling, and that dollar is going to look relatively attractive. So I build my entire basis around the US dollar, and then I trade what is in focus. So for example, right now, I don't really love the idea of like being super active on gold, because the nice upward trend that we were going through has kind of stalled out. We've lost that momentum. So I stick around to where things are moving well. So I'll start with the dollar, I'll get a bias, and then I'll go find the areas in the market that are moving well, and then I can find the better, at the end of the day, a chart's got to move for you to make money on it. So I'm looking for charts that are already moving and trying to get involved, rather than trying to play something that's kind of stuck in a range. So I know it's a long answer, but that's a really good question, and hopefully I answered that for you and for anybody else who is curious about this. I know you also have some news for us, which again goes back to that concept. We're very fixated on these streams in covering US economic data. Of course, we cover other countries, but the US is really our focus on this show. So what do you have for us, James?
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.